Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us on the show. Mayuresh, afternoon, and thank you very much for joining in. Paints, 3.5% up move on Asian Paints, and some of the others like Berger, Indigo are seeing much higher moves. What have you made of this latest move about the price hike, and do you think there is more to go?
Afternoon, Rima. Seems to be a possibility because the timing of this price hike is probably the worst quarter that paint companies are probably looking at. So after the price cut of almost 4% that we've seen in quarter four, some element in terms of a price increase looks to be of some respite for these companies. Obviously, I think the input costs have not moved higher. So to that extent, the expectations in terms of the second half, repainting demand coming back very, very strongly seems to be a base case scenario. Again, as a base case, when you're talking about the real estate cycle and a lot of refurbishments expected, both in new homes as well as existing homes, the expectations in terms of a 10 to 12% volume growth is expected. The new entrant, Birla Opus, probably is not in a position to probably do hikes right now at this juncture. And therefore, the market leader, Asian Paints, which has been followed by Berger, gives testimony that these companies are probably sensing that the second half might be relatively better. So yeah, I think these stocks can be kept on your radar. It's how the numbers probably will stack up in Q1 and Q2, which will lead to some element of re-rating as we head to the second.
Okay. Hi, Mayuresh. Good afternoon. Good to see you in. Mayuresh, what's your view on exchanges? You know, the ones that we have listed here, BSE, it's come off a bit from the recent top. But remember, it had a super 18 months. And now that news flow with regard to curtailment of trading, etc., you know, seems to be damping sentiment, at least in the near term. So BSE with the other two listed companies as well, we have IEX, the energy exchange, which is down 4%. And MCX as well is down close to around 4%. View on any of these three?
So afternoon, Nigel, I think the stocks had run up a little bit too much for our comfort as well. So what we track at MarketSmith in terms of both our EPS, RS ratings and base pivot levels as well, I think it was way high, way above the pivot level as well. Again, the kind of news flow that we're probably getting at this juncture in terms of F&O curves that might or may get introduced, volume activity will definitely take a hit if that probably does happen. And that will take an impact in terms of their transactional revenue. As far as the annuity part of the business is concerned, Nigel, for most of these exchanges, that should continue on a very strong footing. But I think to a large extent, I think the fear that is there, that if these norms do get implemented, if trading volumes do take a hit, the transactional numbers will start coming down, which will again hit their overall profitability, both from the top line, right from EBITDA to the bottom line as well. So I think we'll wait for declines on these counters, not in a rush to get into any of these adversaries.
Again, I mean, insurers, because that's another story we reported in terms of price hikes on the term policy side. Yeah. Mayuresh, do you own anything?
So at a global level, we continue holding, Prashant, afternoon to you as well, SBI Life. Our take is with the term insurance hikes that have taken place, it's a marginal part in terms of their overall APE. So to that extent, how much does that create or have a bearing in terms of overall earnings growth is something to be seen. On the other hand, if you probably look at how insurance players, specifically life insurance players, are positioned in terms of the product mix, specifically after last year's budget changes, a lot of players, including HDFC Life, ICICI Pru, Max Life, had to make changes in terms of their portfolio. And therefore, I think a lot more in terms of front-end expenditure, in terms of overall commission charges, which is quite a lot for most of these players, anywhere between 18 to 22%, takes a substantial chunk in terms of the overall return on embedded values. SBI Life, to that extent, I think is a relatively better play in terms of product mix, in terms of the protection plans that it has to offer, in terms of the overall commission structure, which is still in mid-single digits, and the huge bank insurance network that it probably has. So pick and choose, I think SBI Life probably stacks right there on the top compared to the other things.
Mayuresh, thank you very much for joining in.